Hey, what's going on? This is Jerry Fetta, owner, founder, and CEO of Wealth Dynamics. Giving you a quick video today. I want to talk about a life insurance secret that most people don't know about. Now, I want to point something out. I'm 30 years old and I'm talking about life insurance. Okay, that in itself is kind of odd. It's not this asset class where you hear about in your, put money in this and it's new and it's fancy like crypto or meme stocks or something like that. What's up, guys? Good to see you. We're talking about life insurance secrets. So I'm talking about life insurance because it's something I personally use a lot. And I've used it for years and years and years and years and years in order to actually build wealth today. This is not retirement planning. This is not put money in an account, wait till I'm 60. This is actually something that I've used to grow my business. It's something I've used to fund my personal development with. It's something that I've used to invest in passive income producing assets with. I've paid off debt with it. I've built reserves for my company with it. I've done a lot of stuff using life insurance. And so the secret with it is that it's a tool that the wealthy have used for almost 200 years in a row now. Okay, it's one of the oldest, most established financial tools used by the top 1%. So there's a special kind of life insurance. It's called high early cash value dividend paying whole life insurance. Okay, now this is basically about 1% of policies issued. So if you look at like the life insurance world of that pie as a whole, a very small percentage of policies are actually designed in a way that you can do the things I'm going to talk about today. Okay, most of them are designed incorrectly. They're sold wrong, and the reason they're sold the way they're sold is because agents and companies make more money to sell them that way. In order to design it the way that I'm going to talk about today, an agent or a company needs to be able to make about 300% less money. Okay, so that's a question of is a company that offers life insurance going to sell a product where they make 300% less, or is an agent going to sell a product where they make about 300% less? And the answer is generally going to be no. Okay, so check this out. When I design a life insurance policy properly, here's what it does. First thing it does is it gives me guaranteed growth. Okay, guaranteed growth. Okay, second thing it does is it gives me guarantees against loss. Third thing it does is it protects my money from taxation. Okay, fourth thing that it does is it actually gives me, let me just move my phone here. It actually gives me the protection from creditors, protection from lawsuits. My money is fully backed. That's another thing I like about it. In the bank, my money's not backed. Banks have a 0% reserve requirement, which means that they don't have to keep any of my money on hand. And they don't. They loan it out to other people. They invest it, pay me nothing. Okay. On top of that, it's insured against insolvency. My policy has a higher insurance policy on it than FDIC insurance covers. Right? So these are all protections I get on my money. When I put money in life insurance, I'm actually doing that for four main purposes. First thing is this is going to be my reserve. I'm going to put money here instead of putting it into a bank account, right? For all the reasons I just mentioned. The second thing I'm going to do with my life insurance policy is I'm going to use it to pay off consumer debt, right? So my car loan, my credit card, my student loan, whatever I might have, I'm going to use my policy to pay that off. Third thing is going to be to self-finance large purchases. I'm going to do things like pay for my car, pay for a down payment on my house, fund my business, like places and times in life where I might go to a bank instead and try and get a loan from them. I'm going to self-finance it with my life insurance as an alternative, okay? And then fourth thing is investing for passive income. Okay, I want to buy income producing assets. So when I set up a policy correctly, like let's say that I put $100,000 into a life insurance policy, and I'm going to go put that in real estate now, right? So my $100,000 goes into the life insurance. Like I said before, it's guaranteed to grow, guaranteed against loss, protected from taxes. It's protected from creditors, protected from lawsuits, protects my privacy. It's fully backed by the insurance company, meaning they actually have the dollars there. They're not being loaned out to other people or invested in the stock market. And also it's insured against insolvency. All that protection's in place. My 100 grand is going to grow at a 3 to 5% annual return on average for the rest of my life, tax-free. Okay. While it's growing, I can borrow 70 to 90% of that immediately. Like from day one, I can pull that money out and use that for my real estate. Okay. While it's in there, it's still growing at 3 to 5% and I'm using it at the same time. Like I'm double dipping on my money. This is the concept, guys. I put the 100 grand in my policy. The 100 grand grows at 3 to 5%. I pull out $90,000, which I'm going to pay about 2% interest cost on, still make the 3 to 5 on the 100,000 because it's growing still in my account, and then take the 90 and go invest in real estate that pays me 12 to 14%. Okay. That's how wealth is built. Like people say, oh, the 1%, why do the rich get richer and why is there this advantage? Because they're doing shit we don't know how to do. They hear something like this and they do it. They're not like, oh, that sounds different, I'm not going to try it, or that must be wrong, or whatever. They're looking at, okay, this is going to get me ahead. So if we never learn these strategies and we never apply the same things they're applying, it's no different than somebody that's really good at, like, let's say being physically fit. I can make them wrong and be like, oh, they're the top 1% of weight loss. They're evil and they're stealing all the calories being burned from other people. No, that's not what's happening. They're working harder than everyone. They know more than other people. They've spent the time to learn. Same thing is said about finances, okay? So what I want to share with you and impart with you is this is the secret about life insurance. The number one owner and purchaser of this exact kind of life insurance that I'm mentioning today are the largest banks in America. The places you have your checking account with. They're buying the stuff I'm talking about today. Not just buying it, they're buying it more than anyone else in the country. Right? Like, it's one thing to be like, I like pizza, I'm going to go get pizza. It's another thing to be like, I'm the largest consumer of pizza in the United States of America. Right? They're the largest consumer of this exact type of life insurance in the entire US. And you've got to ask yourself, why is that? What are they doing and why are they doing it? Okay. So I'm going to drop a link here in the comments for you so that you can learn more about this strategy. I'm going to be teaching a webinar. It's going to be 1 p.m. Eastern time this Saturday on how to use life insurance like this. Okay. So if you go to course.wealthdynamics.com, course.wealthdynamics.com, that's going to be 1 p.m. Eastern time this Saturday. Make sure you tune in for that. Thank you for watching. Make sure you like, share, and follow if this helped you, and I'll talk to you next time. Hey, thank you so much for watching my channel. My name is Jerry Fetta, and I want to encourage you, if this content helped you, be sure that you like the video, subscribe, share it. I also want to give you a free copy of my book, Blueprint to Financial Freedom. If you go to jerryfetta.com/B2F promo, or just click the link in the description, you can get a free copy of this. Hope to see you enjoying some more content soon.